Okay, so you know that insurance policy you have tucked away somewhere? Yeah, that one. It's not just a bunch of paper, it's a promise, a legally binding one. But what happens when things get messy? Well, today we're going to decode that fine print. We're going to pull back the curtain on the rules that really decide if that promise holds up.
All right, here's our game plan. First, we'll tackle what an insurance contract actually is. Then, we'll get into this massive idea of utmost good faith. It's all about honesty. We'll look at your application, what happens when things go wrong, and wrap up with the legal rules that have your back. All right, let's kick things off with Section 1, the insurance contract promise. I mean, what's really in that fine print? Before we get into all the juicy stuff, the disputes, the legal drama, we got to get our heads around what an insurance policy truly is at its core. Because, everything else we're going to talk about builds right on top of this. So what is an insurance policy really? It's way more than just a document you file away and hope you never need. I like to think of it as a handshake, but one that's frozen in time and has the full weight of the law behind it. It's a promise, for sure, but a promise with some serious financial muscle.
Yeah, at its heart, an insurance contract is a pretty simple deal. It's a written agreement where one side, the insurer, promises to pay you, the insured, if some specific unknown bad thing happens. You pay them, they promise to have your back. The contract is just the official rulebook for that deal.
Okay, so what actually makes up this contract? Well, you've got the basic policy form, any add-ons like riders or endorsements, and this is the part everyone overlooks, a copy of your completed application. Yeah, you heard that right. That form you filled out isn't just paperwork. It legally becomes part of the contract. So, every single answer you gave, it now has real legal teeth. Okay, moving on to Section 2. This is a big one, the utmost good faith rule. You can think of it as a pact of honesty. And since we just established that your application is part of the contract, this next principle is maybe the most important one in all of insurance. It's not just a suggestion, it's the foundation the whole thing is built on. So what is utmost good faith? Well, it's the core idea that both you and the insurance company have to be completely honest with each other about all the important facts. We're talking about a higher standard than your typical business deal. No concealing, no disguising, no trying to pull a fast one. Honesty is basically baked into the DNA of this relationship. And look at this quote. The key word here is both. This is so important. It's not a one-way street. It's not just on you to be honest. This rule holds the insurer to the very same high standard. They have a legal obligation to be straight with you too. Okay, Section 3, truth, lies, and applications. This is where your statements really matter. So this pact of honesty sounds great, right? But how does it actually work when you're sitting there, pen in hand, filling out that application? Let's break it down. Okay, you really need to understand the difference between these two words, warranty and representation. A warranty is like a sworn promise that something is 100% true, no exceptions. But your answers on an insurance application, they're considered representations. That just means you're saying they're true to the best of your knowledge. And that difference is huge. It means the law gives you a little wiggle room for an honest mistake. So if you do make a mistake, the big question isn't just, was it wrong? The real legal test is, was it a material misrepresentation? Material is the key word here. All it means is, was the false statement something that would have actually changed the insurer's mind about giving you the policy in the first place? If not, it might not be a big deal. Then there's the flip side, concealment. This isn't about saying something false. It's about failing to say something true. It's when you neglect to disclose a known important fact when you're applying. If you intentionally hide something big, that can be serious enough for them to void the whole contract. So let's sum this up. Key takeaway, honesty is non-negotiable. But there's a really important consumer protection built in. See, insurers only have a limited time to challenge what you said on your application. It's called the contestability period, and it's usually 2 or 3 years. After that clock runs out, they generally can't come back and cancel your policy for a mistake, unless, of course, it was actual fraud. Which brings us to Section 4, when contracts break down. What are the consequences of these broken promises? We've set up the rules, right? Be honest, disclose everything important. But what happens when someone breaks those rules? Well, the fallout can be pretty serious. You're going to hear these two terms a lot, void and voidable. They sound similar, but legally, they're worlds apart. A void contract basically means it was never a real contract to begin with. Think of it like a contract for an illegal purpose. It has zero legal effect from day one.
Avoidable contract, on the other hand, is valid, but one of the parties has the legal right to cancel it, like when an insurer cancels a policy because you stopped paying. And speaking of cancellation, remember, this is your power too. It's the voluntary act of ending the contract. As the policy owner, you have the right to walk away anytime, for any reason, no questions asked.
But then there's fraud. And we have to be super clear here. Fraud is not an honest mistake. It's deliberate, intentional deceit. It's lying on purpose to get money from an insurance policy. And here's the thing about fraud. That 2-year contestability clock we talked about, it usually doesn't apply. If an insurer proves you committed fraud, they can often void the policy, no matter how long it's been.
All right, on to our final section, number 5, the law's final say. These are your legal safety nets. After all that, let's look at some really powerful legal ideas that often act like a referee in a dispute, and a lot of the time, they're on your side. First up is something called the peril evidence rule. Sounds fancy, but it's simple. It just means that the written contract is the final word, period. Any verbal promises or discussions you had with an agent beforehand, they don't count legally. What matters is what's in writing. If it's not in the contract, it's not enforceable. Next is the idea of a waiver. This is really interesting. A waiver is when the insurance company voluntarily and intentionally gives up a right they have. So if they know you did something that violates the policy, but they act like it's no big deal, maybe they keep accepting your payments, they might have legally waived their right to use that violation against you down the road. So, what does a waiver look like in the real world? Well, say they get your application and you forgot to answer a question, but they issue the policy anyway. They've likely waived the right to complain about that missing info later. Or maybe an officer at the company says they'll pay a claim even though the policy says they don't have to. That's a waiver. Even just finding out about a lie and doing nothing about it, that can be a waiver by silence. And that leads us to this huge consumer protection concept called estoppel. This is a big one. Estoppel is a legal rule that basically says an insurer can be stopped from denying a claim if their own agent's misleading actions or broken promises caused you to suffer financial loss. It's the law's way of saying, nope, you can't go back on your word now. So, how does it work? Well, there are 4 key ingredients. Step 1, an agent gives you inaccurate information. Step 2, you reasonably rely on it. Step 3, the insurance company then tries to deny your claim based on what the contract actually says. And the final step 4, you suffer a financial loss because of all this. If you can check all 4 of those boxes, the law can step in and force the insurer to stick to what their agent said, not what's in the policy. So now you know the rules of the game. The question is your policy a promise you can trust? Look, understanding these ideas, from utmost good faith all the way to estoppel, it's not just about being smart, it's about being empowered. It's about making sure that the promise you've been paying for is one that will actually be there for you when it counts.